Hi everyone, this is a technical analysis on USDJPY. Let's start with some fundamental background first. In the US, the Fed left interest rates unchanged as expected at the last meeting. The macroeconomic projections were revised higher, and the dot plot showed that the FOMC still expects another rate hike by the end of the year, with less rate cuts projected in 2024. Fed Chair Powell reaffirmed their data dependency, but added that they will proceed carefully. The US core PCE last week came in line with expectations, so the market's pricing barely changed. The labor market remains pretty resilient, but we are starting to see some weakness as continuing claims missed expectations once again last week, pointing to an upward trend. The US retail sales recently beat expectations by a big margin, with positive revisions to the prior figures, suggesting the consumer spending remains solid. The recent US PMIs showed that the economy now looks more balanced. The US Employment Cost Index yesterday showed that wage growth picked up in Q3. The US consumer confidence fell for the third consecutive month, although the data beat expectations. Fed Chair Powell and other FOMC members continue to highlight the rise in long term yields as doing the job for the Fed, and therefore they are expected to keep rates steady this week. The BOJ kept its monetary policy basically unchanged, but formally widened the yield curve control to 1% on the 10-year JGBs, stating that it will be a reference cap. Governor Wheeler repeated once again that they won't hesitate to take easing measures if needed and that they are not foreseeing sustainable price increases. The recent Japanese CPI showed that inflationary pressures remain high, with the core reading hovering at the cycle highs. The unemployment rate last month remained unchanged near cycle lows. The Japanese manufacturing PMI matched the prior reading, remaining in contraction, with the services PMI falling but holding on in expansion. The latest Japanese wage data missed expectations once again, which is unlikely to lead to a more hawkish BOJ in the near future. The Tokyo CPI, which is seen as a leading indicator for national CPI, beat expectations last week. Now, the daily chart, we can see that the USD-JPY pair eventually managed to break decisively the 150 level as the BOJ disappointed, and we got a report that the BOJ hasn't intervened in the prior month. This news gave the buyers more confidence to push above the key level and extend the rally into the cycle high around the 152 level. We can also notice that the divergence with the MACD is now massive, and we are even around an important level. In such instances, it takes just one notable fundamental catalyst to change the entire trend, so the market participants will be on alert. On the 4-hour chart, we can see the strong rally from yesterday here when the pair just kept on going up with no pullback. The sellers are likely to start stepping in around these levels, with a defined risk above the cycle high, as the risk to reward in case the pair reverses the trend would be massive. The buyers, on the other hand, are likely to lean on the previous swing high around the 150.70 level, where we can also find the 38.2% Fibonacci retracement level for confluence. On the 1-hour chart, we can see more closely the setup for the buyers, with the red 21 moving average starting to roll over. Watch out for the US labor market data this week, as we might get a complete reversal in case the figures disappoint. This week we will get lots of tier 1 data points with the US labor market and the FOMC decision in focus. Today we will get the US ADP, the SM manufacturing PMI, the job openings data and the FOMC rate decision. Tomorrow we will see the US jobless claims data, while on Friday we conclude the week with the US NFP report and the SM services PMI.